I apply the grab the play right from the start method of trading. You are taught to capture the ignition, the igniting of explosive moves, not jump on board per se existing moves that have been going on for a while. That is momentum approach. So you are grabbing the beginning. This is the first freaking green bar of the morning, of the open, right in the best location. And the rest is history. That is catching the start of something. That's not multiple green bars up, multiple green bars up, multiple green bars up. Now I join in. That's momentum style of trading. We caught the first freaking green bar in location one. That's the igniting bar. That's the start of the move up. That's not momentum. So going to the beginning to grab your opportunity, in my opinion, is a more superior form of trading. That's what I teach you here. That is every video, everything I'm teaching you in an event where the buy point is, it's the beginning of something, not the momentum. Let's go back to it again. I'll show you this. What you're looking at is this play was taken by a lot of my traders just because it just lined up so perfectly here, guys. You're looking at a 2-minute chart. Right here's the time frame. Looking at a 2-minute chart of NVIDIA. So every bar represents 2 minutes of trading, right? Now, this is the open on Friday. This red bar open. So as you can see, this was the prior close. NVIDIA gapped up, and then immediately the first 2 minutes started dropping down. My traders are taught that when you are right above your 3 items, 1, the 20, 2, the 200, and 3, the price itself. At the open, I'm going to grab the 3 items, right? 1, 2, 3. I'm going to put a box around all 3 items. Look at this. In addition to that, I'm going to extend that box a little bit into the future. That becomes my stock's state. Some of you who have been here on my YouTube channel for a while, you understand that I'm a huge believer that you should not be trading unless you first grab the stock's state. So we've just grabbed the stock state by grabbing those 3 items and drawing a box around it. Now, when you are right above the stock's state, you are in location 1. When you are not close but not very far, you are in location or position 3. When you are way above that state, you are in zone 3. All right? Now, the best longs occur from zone 1. Longs and shorts can be taken from zone 2. But what I'm going to tell you is that you probably want to take more longs from 2 than shorts. So I'm going to put 3. You always want to go long from position 1. You can go long from position 2 and sometimes short, but you definitely want to be more long leaning in position 2 than short leaning. So I put 2 instead of 3. And then every now and then you can have a long way up in Pluto land, but mostly I'm going to say lean short. So look at position 1. No red arrows, don't short. Look at position 2. You can short sometimes, but lean more toward long. And look at position 3. You want to lean short way up there in Pluto land. Every now and then there might be a long opportunity, but lean short. This is how you come up with odds. You come up with odds based on event married with location. Because the first bar of the morning was a bear bar in a bull position, we do nothing. All right, you got that? Your 1 is the most bullish location, but we have a bearish bar. There's conflict. You do nothing. But when you get a bullish event in position 1, people, when you get a bullish event in position 1, all bets are on, not off. And the second bar dwarfs the first bar, giving us what many of you know as a bull 180. It's a 180-degree turn in the opposite direction. Everything that I teach you here, everything that I show you, every technique, every concept, every approach, every strategy is applicable across all time frames and all markets. My method is designed to teach you how to take advantage of fear and greed and their two interactions between each other. I specifically, my style focuses on how to explore or identify the beginning of explosive moves. That is my specialty, and that is what I share with you. I am not the momentum type, style type of trader. All right. I'm not saying that momentum trading is inappropriate. I know some amazing traders who apply the momentum style of trading. I do not. It already left the station. You're going to run, the train left the station. You're going to run along the train while it's moving and you're going to jump on the moving train. That's the momentum style of trading. I teach you to get on the train right on the platform, right before the bullet train takes off. That is my approach. That approach, that style is applicable in all time frames and in all markets, futures, equities, everything that trades. Now, there are certain items that I prefer going up the time frame scale. So when you're trading indices, I actually prefer a bigger time frame. So maybe a 5-minute or a 15-minute time frame. I think those time frames are better when you're trading indices, which do have a slightly different dynamic that drives them. When you are playing individual items such as stocks, you can go smaller. Now, I don't recommend going smaller than 2-minute because you can take anything too far and you can get so close to the noise that you start losing the items of significance. When you go too far down the time scale, a tick chart, even a 1-minute chart, when you get that small, things look bigger than they are. You ever have one of those mirrors in a car or what have you, and it has a little inscription or a little warning? Things may appear bigger than they are in this window, in this glass, in this mirror. Well, if you get too close to the noise, to the minutia, everything looks enormous. And this can fool the trader and pull the trader into events that aren't significant at all, but they looked different. And you realize, wow, this thing looked enormous. This thing looked like a monster. This thing looked like it was significant. But when I stepped back, it was absolutely nothing. So there's a cutoff. And I've always taught my traders that the 2-minute is your cutoff. And some traders get into this mode where, Oliver, I think I missed too much on the 2-minute, so I'd like to go down to a more refined time frame. That's BS. You're not missing anything letting 2 minutes of all the minutes in the day, letting 2 minutes go by to give you some clarity. You're not missing anything. Missing is not your problem. Something else might be your problem, but certainly your time frame is not your problem. Not having a small enough time frame if you're trading off the 2-minute. I trade off of the 2-minute about 90% of the time, maybe 85 to 90% of the time. The other percentage of the times, I'm sort of initiating a play largely based on the 5-minute. But most of my decisions for a trade are made up of a 2-minute chart. So remember I told you in answering this question, I told you I teach you capturing the start of a move, not jumping on board in already existing mood. I want to show you an example of this, okay? And my traders piled into that green bar. As soon as it crossed the high of that red bar, boom! They just piled into that green bar right there. Piled in, boom. Pile into that green bar as soon as it crosses the high of that red bar. Boom, stop under the 2-bar event. The Bull 180 is a 2-bar event. Now, here's my point with this, guys. You are grabbing the beginning. This is the first freaking green bar of the morning, of the open, right in the best location. And the rest is history. Now, notice after the initial leg to the upside, it has a very healthy rest by pulling back in a very healthy fashion back toward the 20-period moving average. It doesn't collapse there, it glides its way there, which is beautiful. And your next opportunity is to grab this green bar right there. Boom. That is what I teach you. Mandatory add on the first pullback as long as the pullback is healthy, and especially the pullback that is at or near the 20-period moving average. You are once again stop below the low. You are once again catching the beginning of the next move. You're not jumping on board the move that has already been going on for a while. That is momentum. I don't teach you momentum. You go to the beginning of the move and we're there. So every time you see a playable run, I guarantee you my traders and I are in it at the beginning. Run. I guarantee you we're in it at the beginning. Run. I guarantee you we're at the beginning of it and then the run happens. And if you stay here, if you rock with me, you're going to be the type of trader that grabs the start of things that other traders join later because they don't have the skill of identifying the beginning of moves. My whole approach is designed to teach you to capture the beginning. Do you understand this? Does this make sense? Are you picking up what I'm laying down? Talk to me. Marrying event 180 in the proper location, position 1, in a nice, relatively tight, narrow state. All of that I teach you here. And yes, that can be applied on a 2-minute chart, 5-minute chart, any time frame. Yes, that same approach can be applied in the futures market, in the equity markets, in the Forex market, any market. The concept doesn't change because you change the market. Why? Because everything I teach you is based on the interactions between fear and greed. That bull 180 you just witnessed on NVIDIA was fear being completely reversed by greed. The green bar took out fear.